but it's a pretty quick process that can save you thousands of dollars. Hi, I'm Jamie with The Saving Secret, where I help you become more intentional with your money. In today's video, I'm going to be talking about, does it make sense to refinance your home right now? With interest rates at all-time lows, we're hearing a lot of messages that it may be the best time to refinance. But I'm going to walk through some of the pros and cons, what's the process, and what are some of the tools that you can use to help you identify if it makes sense for you. If you're new to my channel, I share videos about how to reach financial independence. I share tips and tricks that I've learned all along the way and share them with you. I post new videos every Thursday. Be sure to hit that subscribe button so you won't miss any of the latest content. Be sure to stay through to the end of the video because not only am I going to share whether it makes sense to refinance right now, but I'm also going to show you a technique that I'm using to help me eliminate my debt in less than 4 years. You're not going to want to miss it. If at any point during the video you have any questions or comments or things that don't make sense or other future content you'd like to see, please feel free to put that in the comment section below. I will respond. One ask that I have for you is be sure to smash that like button. It really helps me out. It helps the channel out. It lets me know that the content that I'm putting out has been valuable to you, so I really appreciate that. Without any further ado, let's jump into it. Refinancing your home is a big deal. It's a great opportunity to kind of hit that reset button on your amortization schedule. It's an opportunity for you to get a lower rate, change your monthly payment, eliminate PMI, and so much more. But remember that just because you're refinancing your home, it does cost money. Now, don't let that turn it away from you because it could cost anywhere between $1,500, $5,000, or even more. But when you refinance your home, you can roll that into your new mortgage loan. So if you don't have the money right away to set aside for refinancing your home, that shouldn't be a reason that you shouldn't consider refinancing your home. So to get started, you really want to understand the process. The first part of the process is to make sure that it's beneficial for you. One of the first questions that you should ask yourself is, do you plan on staying in this home for at least 3 years? That's the first question you should ask. The second question you should ask is you need to find out if you have at least 20% equity in your home. What I mean by that is if you have $160,000 left on your mortgage, is your home worth at least $200,000? The reason why 20% is that magic number is because it's a way for you to eliminate PMI or private mortgage insurance. If you have more than 20%, you do not need to worry about it, and this is a huge savings for you, especially if you did another kind of loan type where you're not allowed to get rid of PMI for the life of the loan. This can really help you out. So you want to make sure that you have 20% equity. One of the great places that you can check and see if you have 20% equity in your home is to look on Zillow, the Zestimate, but really just be aware of the homes in your neighborhood that have recently sold that have similar square footage, similar proximity, similar age of the home. If you have a couple of homes in your neighborhood or your area that have sold, that'll give you a good idea of what your home value is, and that home value will then help you figure out what your home equity is. So that's something you definitely want to check out. Another thing to consider is looking at the current interest rates, understanding what your current interest rate is on your mortgage right now, but it's also important to see what it can be in the future. And you can do a little bit of research on this, but if you have an interest rate of, let's say, 4.25, you want to make sure that you can get your new interest rate at about 3.25. A good rule of thumb is to make sure that you save on your interest by at least 1%. This is not a hard and fast rule, but it's definitely something that you're going to want to keep in mind. Another question you want to ask yourself, is this going to help you pay off your home faster? If by refinancing it's going to take you longer to pay off your home, then it may not be worth refinancing. by refinancing your home from a 30-year when you've been paying on it for 5 years just to go back to a 30-year doesn't really make a lot of sense. You may save a little money on your monthly payment and on interest rate, but over the life of the loan, you're still going to pay significantly more money. So you're going to want to look for a way to reduce your term. I recommend looking for a 15-year term on your mortgage. This is also going to help you get the best possible interest rate. So that's something that you're definitely going to want to consider. However, keep in mind that when you refinance to a 15-year mortgage, there's a good chance that your monthly payment will go up. It may go up by a couple $100. However, your savings could be tens of thousands of dollars in the future. So even though your monthly payment will go up, you'll be saving on the long run and reaching financial independence faster. Once you've identified that you want to refinance your home, you want to make sure that your credit score is good. You want to make sure that it's better than good. You want to make sure that you're taking care of everything to get your credit score appropriate so that you can get the best possible rate. There's a lot of free tools out there. I would encourage you to use those. If you have any problem with credit scores, you're going to want to make sure that you get those resolved before you really start the process. So make sure your credit score is up to date and accurate so that you can get the best possible rate. Once you've confirmed your credit score is looking good, then you're going to want to shop around. This is where you're going to want to reach out to several different lenders. You're going to want to find out where it can get you the best possible rate. So obviously you can start your internet search and you can look at different places that are going to offer you Lending Tree or different promotional offers that are going to get you the best rate and best deal. One place that I would make sure that you definitely check into is your current banking situation. For those of you who've seen my other video, I'm a big fan of Ally, and I use Ally for my checking and savings account. But if I was to refinance right now, I would definitely work with Ally, but work with your current bank, because a lot of times they can offer you deals and discounts on closing, and they also work with you as a customer, and so the process is just going to be a little bit smoother because they're going to know a lot of the information already that maybe some new bank is going to have to take even more work. So I would encourage you to definitely check out your bank. You want to make sure that you've at least reached out to 3 banks to make sure you've done your due diligence to give yourself the best possible rate. Once you've decided on a particular option, then you're going to want to lock in that interest rate. So you lock in that interest rate with whoever you choose. Then after you lock in that interest rate, it gets to that all-important home appraisal. They're going to set up a home appraisal, and just like you saw on Zillow, it might not be exactly what you saw earlier, but should be similar to what you already did. Once the appraisal comes back, it'll go to underwriting, they'll confirm a lot of the information, and then you'll be good to go. And then they will take the new loan, will take care of the old loan, and then you'll pay for the new loan. So it's a process that only takes a few weeks, maybe 3 to 4 weeks, maybe longer, maybe shorter, depending on how quickly you can get your paperwork together and how quick the appraisal will happen. But it's a pretty quick process that can save you thousands of dollars. So one tool that I wanted to share with you is a great resource. It's at calculator.net, and I have a link to it in the description below, but let me show you the great tool that can help you figure out in your situation if it makes sense. So go ahead and click on that link. So once you go to calculator.net and type in refinance, you're going to be brought up to the Refinance Calculator. This is a great tool. So let's walk through an example. So let's say you had a $160,000 loan on your home that you bought 5 years ago. You bought it for a 30-year mortgage and you had 4.25% interest, and you've been paying on that for 5 years. But you want to refinance. You want to get a 15-year loan term. You want your interest rate to go down to 3.25, and you recognize that it's going to cost about $2,500. So go ahead and click that calculate button. From here, it's going to show you that
when you refinance, it's going to cost an additional $233 extra. So yeah, your new loan payment's going to be a little over $1,000. However, you're reducing what your total payment is by 10 years. You're lowering your interest rate by 1%. And what's really great about this is your total interest will be reduced by over $50,000. So by paying $2,500 now, you're going to get a reduction in your interest by almost $50,000. Yes, you're paying an additional $233, but you're getting significant savings. So this is definitely a scenario where you'd want to refinance. You're going to save over $50,000 by refinancing. So this is a cool tool. So if you haven't checked this out, feel free. I'll have a link in the description where you can check that out. But remember, the bank's perspective is they want you to be able to pay this additional $50,000. So they want you to have more payments. They want you to have more interest that you're paying for them. But the financial independent perspective is you want to be able to reduce that and eliminate that as much as you can. So again, eliminating your house payment is a great thing. So at the beginning of the video, I did tell you that I had a technique that allowed me, and I'm in a process of paying off my home in less than 4 years. So let me walk through that example with you.
I actually have a great video that I just did recently on this that walks through step by step of how I've done this. So if you're interested, be sure to click on that video where you'll be launched. But the principle is very simple. You need to pay on your principal extra every month, and then once a year also put an additional principal payment. By doing those together, you're able to reduce your payment significantly. So if you're interested in that, be sure to click on that video so you won't miss any of the details. I know that refinancing is a big deal and it can be expensive, and it can save you thousands of dollars. So if you found this information helpful, be sure to hit that like button. If you haven't done so already, be sure to hit that subscribe button so you won't miss any of the latest content on helping you reach financial independence. If you like this video and are interested in some other videos, be sure to stay and check out some of these other videos that help you reach financial independence. Thank you so much for watching and have a great day.